have a very special presentation. We survived the election season. Congratulations, America. We have our new president-elect, Donald Trump. Whether or not you voted for him or supported for him or supported the other parties, the other good candidates in this election, we have now a president-elect who's talking about a game-changing policy that would impact not only this generation, but America today and in the future. Donald Trump was talking about, or is talking about, abolishing the Federal Reserve. Before we started talking about the Federal Reserve, in terms of abolishing it, we have to know what the Federal Reserve does. What is the Federal Reserve? A lot of people think that the Federal Reserve Bank is a part of our government. Most Americans don't know how our monetary system works. Most Americans do not know how Wall Street reacts with the banks, with our financial system. We do not know how money is created. For the most part, Americans look at the economy as a sort of a myth, sort of a fantasy to some, sort of a mystical illusion to some. We get up in the morning, we wake up, we go to work, we get a paycheck, we pay our bills. For those who are lucky enough to have jobs, for those who don't, they're waiting for an unemployment or they're waiting for Social Security and so on and so forth. But our economic system, America's economic system, is part and parcel of a huge world economic system. Now, after all that, what I'd like to do is to talk about one of a well-respected economist here in San Francisco. We invited Brian Brown, who will give us a presentation of what the Federal Reserve does, what it's about, and what this whole monetary and economic system is all about. Welcome, Brian.
Thank you, Myrna. Appreciate it.
Thank you so much for joining us. And Brian has prepared a very thorough and very sophisticated PowerPoint presentation for us. So what we'll do is have Brian talk about what is the Federal Reserve banking system.
Well, the first thing I'd like to say, Myrna, is that you said how important this change might be. The four major institutions in the United States, four most powerful, is the President, Congress, the Supreme Court, and the Federal Reserve Bank. And I am one of these people that believe the Federal Reserve Bank is the most powerful of the four. And it's also, in my estimation, one of the most, if not the most powerful organization in the world because of its control over the U.S. monetary system and the influence of the Federal Reserve and our dollar on the rest of the world.
So, when people talk about how our money changes hands, there's always a lot of discussion out of Washington, D.C., broadcasted in the corporate media about how much debt the U.S. has today. Here's a graph that Brian presented, that Brian developed. It says, people we owe money. And the pie chart talks about 34% being international investors, the orange. And then right underneath that is domestic private investors, 2.662 trillion. And right next to that is the Federal Reserve for 2.61 trillion at 13%. The state and local governments at 858 billion. Others at 895 billion. And the federal accounts at 6.118 trillion, which is 28%. So that's a lot of debt.
A lot of debt.
And that indebtedness has been going on for years. So what we want to focus on for the purpose of this program would be two major debts. One of which is, it looks like our government owes the federal government, the Federal Reserve, 13% or $2.621 trillion. So can you tell the folks, who is the Federal Reserve? What do they do?
Well,
And how did the U.S. government end up owing the Federal Reserve so much money?
well, the Federal Reserve was established in 1913 under President Wilson, and also that year is momentous in that the 16th Amendment and the federal income tax came into being.
Mm-hmm.
And the Federal Reserve has a number of functions. One is to control our money supply, and we have talked about how that happens.
Right.
If the Treasury Department,
Okay, before we do that, the Federal Reserve is not part of the U.S. government.
no, and it's a misnomer to call
The
it
federal government is an independent, privately owned
with 12
organization.
12 subsidiary of Federal Reserve banks,
Right,
and it's supposed to be a non-profit,
right,
but it seems to have the ability to create money out of thin air.
right.
And many people, and many people say that the Federal Reserve, the Treasury realizes there's a shortfall
Right.
between tax revenues and other revenues versus expenditures.
Mm-hmm.
So to fund that shortfall, the Treasury issues IOU notes, bonds, and the Federal Reserve accepts them, gives us money, but we pay interest on those bonds, which means we're paying interest on our money supply. Now, many people say instead of doing that, we should just print up the money and bypass the Federal Reserve. And that's one part of our money supply. Of course, the money that we put into the economy goes into the banks, and the banks loan that money out. They have, our banking system is modeled after the Bank of England quite closely,
Right.
and we use fractional reserve banking, which simply means that the banks only have to keep about 10% of the money
Mm-hmm.
that they have outstanding in a reserve requirement. The Federal Reserve can change that, so the rest of the money, you could basically $1 million of deposit will be multiplied 10 times, 9 to 10 times. It depends on whether there's leakage from the system and people don't redeposit. But sort of a simple process. You put in $1 million, and I'm a banker, then I realize you're not going to call down for that money. I've given you an IOU as a bank, and you've got a checkbook. So then I loan out maybe 900,000 of your million, and that process goes on until it reaches the fractional reserve requirement. That's a very simplified manner, but that's sort of the way our money supply gets increased.
Yeah, this is what, Brian, this is what you're talking about. This is the
Yeah, I think
chart where it says, how does the Federal Reserve banking system control the money supply? So here you're talking about changing the reserve requirements of commercial banks.
I want to get to that page.
And then you have the changing of the discount rate, the open market operations, and that the Federal Reserve has the Federal Open Market Committee, which is the branch of the Federal Reserve that determines the direction of monetary policy. And this committee is composed of the Board of Governors, which has 7 members, and 5 Reserve Bank presidents. And most of the money supply change is a secondary function via the commercial banking system. So basically, what you have here is this non-governmental entity, the Federal Reserve Bank, controlling the monetary supply of the country and sets the reserve requirements for other commercial banks, the discount rates, lend monies to our own government. In other words, if our government runs out of money, which it always does, our government does not get enough money coming in, it has more money going out. Example would be all the wars that the U.S. seems to be involved with, that has been involved with in the last 15 years. So it's always borrowing money so that they go to the Federal Reserve, and then the Federal Reserve then puts in a little computer in an electronic setting and lends the money, right, Brian?
Yes.
To the U.S. government and make money on top of that.
Yes, that's exactly right. The Treasury Department gives IOUs to the Federal Reserve Bank, and they give us back Federal Reserve notes, and they just credit us electronically.
Right.
And there's, what is backing it? There's many people like Ron Paul wanting to understand this process by a detailed audit with the Federal Reserve Bank. You have the figure diagram up there. The open market operations, if they want to take money out of the economy, they sell bonds, right? When they sell bonds,
here's your money creation graph, right?
And it's sort of a little complex to go completely through it, but it goes through the process there, which shows you the government, how the government spends money and hires people, and
go to those use Treasury. Now go ahead, and then the Treasury Bonds.
Student to date on this.
Exactly. And then they go to, and the U.S. government goes to the Federal Reserve Bank. They issue bonds, which is basically notes of indebtedness.
Right.
And then.
But they got to pay that. We have to pay
interest on that. Exactly.
And a lot of people are saying the Treasury, which under the Constitution has the right to print notes and issue, not print notes, coins.
Right.
So they issue these notes, and the Federal Reserve Bank gives us Federal Reserve notes. And these notes are not backed by anything. They're fiat money. It's not like a gold standard or a silver standard. And as you so well pointed out when we were having chats about this, President Kennedy in 1963 started to issue Treasury notes backed by specie or valuable metals. Right. And they looked identical to a Federal Reserve note, except they had Treasury notes on it. Well, I don't think that at the time was a very popular move for President Kennedy, but he was probably as concerned about this creation of money out of nowhere type Ponzi scheme that many people say we have going with the Federal Reserve Bank.
Well, if we talk about the previous graph, right, where we show folks this pie,
right,
and it shows that we owe the Federal Reserve 13% of the total indebtedness, and that's at $2.461 trillion. So the U.S. government owes this Federal Reserve, this entity, $2.461 trillion.
Did you want to go through the various accounts on the pie chart? Yes, that's true.
Right. So how did the U.S. government end up owing this private entity $2.46 trillion with a T?
Well, to create money, to get money, if it's broke, if the government's broke, what did they do? The Treasury Department, who takes care of our accounting, they go to the Federal Reserve Bank and say, we need X billion dollars to invade somebody or put some project in place, and we haven't got it. And with Congress and the President's permission, they issue bonds, Treasury bonds, notes, to the Federal Reserve Bank. And in return, the Federal Reserve Bank gives them Federal Reserve notes, just like in your wallet,
Right.
Or they write the amount electronically in, but it's the same thing.
Right.
That's called the the U.S. dollar is the Federal Reserve note. And as I had you look at the other day, if you look at each note, you'll see there's a number on it. If you see 12, which district is that?
Right.
San
That's New
Francisco.
York. Right, San Francisco.
So Myrna, it's basically, we're paying for our own money, interest on it. And what does the Federal Reserve Bank have backing?
Nothing. It's just in debt.
Nothing
Yeah.
but the strength and purpose of the U.S. government.
Right.
Other than that, it's a very complicated diagram, and I hope the listeners will take time to go through it. It's not actually complicated. Just these things are all happening simultaneously. I mean, nothing is static in this world of monetary policy.
Well, the interesting thing about this is if we look at the history of the U.S. monetary history,
Yeah.
first of all, the U.S. Constitution provides that Congress has the power to coin money,
Right.
to basically print money, to create standards and weights.
Well,
And
that was a court case, whether they could print notes.
that's
And they
McCulloch.
won that case.
Yeah, the case of McCulloch v. Maryland
Yeah.
granted Congress the ability to print money. But basically, of the three branches of government, the executive branch, Congress, the court system, it is the Congress who has the ability has the power to create money.
Right.
And as a matter of fact, if you look at the history, right,
Yeah.
even the states may not create money.
No, they may not.
And in the 1700s, in 1791, there's the first National Bank of the U.S. In 1816, the second National Bank of the U.S.
They didn't sustain. Did they?
And then in 1913, President Woodrow Wilson signed the Federal Reserve Act.
Yes.
While he signed the Federal Reserve Act at that time, the government also signed the personal income tax.
Yes.
And ladies and gentlemen, let me just read to you complement of an online journal publication, Counterpunch. Here's what former President Woodrow Wilson, a Democrat, stated 3 years after he signed the Federal Reserve Act. He said, okay, and hindsight is always, the best thing. The 28th President of the United States, 1913 to 1921, President Wilson said, "I am a most unhappy man. I have unwittingly ruined my country. A great industrial nation is controlled by its system of credit. Our system of credit is concentrated, the growth of the nation. Therefore, and all our activities are in the hands of a few men. We have come to be one of the most ruled, one of the most completely controlled and dominated governments in the civilized world. No longer a government by free opinion, no longer a government by conviction and the vote of the majority, but a government by the opinion and duress of a small group of dominant men." That's very powerful. And there is this publication. Ladies and gentlemen, the thing is, this is a challenging issue for us, right, Brian? But it's time that the American people focus on this. President-elect Trump talked about abolishing the Federal Reserve. It's time that the media start talking about it. Start educating the people about what the Federal Reserve is. First of all, there are a number of things that had happened Do people know that the Federal Reserve Bank bailed out and gave $16.1 trillion to commercial banks with hardly any interest rate? That's one. Do the American public know that after bailing them out, the commercial banks were paid by the Federal Reserve almost $600 million to administer that number? Do the American people know that the Federal Reserve Bank pays the commercial banks not to loan money? So let me read to you as we close, a quote again from Concurrent. This is from the third president of the United States, Thomas Jefferson. He said, "The private central bank is an institution of the most deadly hostility, existing against the principles and form of our Constitution. If the American people allow private banks to control the issuance of their currency, all the banks and corporations that will grow up around them will deprive the people of all their property until their children will wake up homeless on the continents their fathers conquered." That is something we should be thinking about, because, ladies and gentlemen, that's where we are now, today. And, thank you, Brian. This is a complicated subject, and thank you for joining us. We will have more shows about this issue in the next few weeks. Thank you so much, and good night.
We're up there. You were the best you've ever been.
Really?
Yeah.